Hello everyone and welcome to this video on the Python programming language. So in this video I will try to determine which investment gives a better return, the stock market or the real estate market. Now I'm currently on Google's website called colab.research.google.com because it makes it easy to get started programming in Python. So if you're going to code along with me, just go to this website and log in using your Google account and get started writing your code. So to get started, I'm going to go ahead and click on File. I'm going to click on New Notebook in Drive, and that will open up a new tab, and it will eventually open up a new cell. Now in this cell, I'm going to put in a comment, a little description about the program. So here, I'm just going to put this program attempts to determine which investment is better, the stock market or the real estate market. Okay, so I'm going to go ahead and create a new cell by clicking this code button in the top left, and that will create a new cell for me. And now in this cell, I'm going to import the libraries needed for this program. But before I do that, and before we begin, if you like the videos on this channel, then be sure to click that subscribe and like button, and to be notified about new videos from the channel, hit that bell notification. Also, you can get the code in this video or the dataset in this video, or just support the channel on Patreon at patreon.com/computerscience, and I will leave a link for that in the description below. Also, the material in this video is purely educational and it should not be taken as professional investment advice. Alright, so with all that being said, let's go ahead and continue writing the program. Alright, so we can see that we get a few suggestions from Colab here about which libraries to import, and I'm going to import pandas as PD, and I'm going to import numpy as NP, and then I'm going to import matplotlib.pyplot as PLT. So I'm just going to click the tab over button for all those suggestions that Colab just gave me, and I'm going to get rid of this last library here. And then I'm just going to run the program by clicking this play button in the left, or on the left. Alright, so while it's thinking, the idea here to make this determination of which investment gives a better return, I will use the S&P 500 to represent the US stock market, and I will use V and Q to represent the US real estate market. Alright, so it looks like that cell is good to go. So let's go ahead and create a new cell. And now in this cell, what I want to do is I want to import the data, or I'll put load the data. Okay, so I'm going to load some files. I'm going to load a file called sp500.csv and another file called vnq.csv, which holds data on those assets. So I'm going to create a variable called sp500, and I'm going to set that equal to pd.read_csv, and then left parentheses, single quotes, and it's going to be called sp500.csv. And then I'm going to create another variable called vnq, and I'm going to set it equal to pd.read_csv, and then single quotes, and then vnq.csv. Alright, now if I run this cell, it should give me an error message because it doesn't know anything about these files yet. So we have to upload those files to Colab here. So to do that, go ahead and scroll over to the left, click on this folder looking icon called Files, and then click this upload button, and I'm going to upload sp500 and vnq, and I get a little warning, and that's okay. Alright, so the files are now being uploaded. I'm going to go ahead and exit the left pane, and I'm going to run this cell again, and now we should not get an error message, and it looks good. So let's go ahead and open up those files. So I'm going to double click on sp500 and double click on vnq.csv, and I'm going to exit the left pane, and let's scroll this over a little bit. And now I'm just going to take a look at some of this data. So we can see some columns. We can see the date column open price column, the high price column, the low price column, and then if we scroll over even more, we can see the adjusted close price column, the volume column, and another date column. All right, so I'm going to scroll this back over here and let's sort this by the date. So I'm just going to click on that date column. All right, and we can see that our data starts from 6/11/2014 all the way to 6/10/2024. All right, so that's about 10 years of data, at least for VNQ, right? So let's go ahead and take a look at the S&P 500, and let's take a look at this data. So we can see we have the date column, open price, high price, low price, and we also have the adjusted close price, the volume, and another date column. So all of that is good. And I'm going to scroll back over. I'm going to click on that date column to sort it. And we can see that we're starting on 6/11/2014 with this data. And this data ends on 6/10/2024. So again, another 10 years worth of data for this asset. All right. So that's what the data looks like. Let's go ahead and exit this and exit this. All right. So now we have a good idea of what the data looks like. Let's go ahead and create this new cell. All right. Now in this cell, I'm going to go ahead and add. Let me see how I want to do this. I'm going to calculate the daily returns. All right, so I'm going to create a variable called call, which will be short for column, and I'm going to get that close price column. All right, and just like Google Colab has suggested here, I'm just going to tab over, and I am getting basically the cumulative returns. So, or I'm sorry, I'm getting the daily returns, right? And with these daily returns, I'm going to calculate the cumulative returns. All right, so let's add daily return to SP 500 and to VNQ. So let's go ahead and run this cell. Let's create a new cell. Now here we're going to calculate the cumulative. Returns. All right. So I'm going to create a variable called SP. You know what? I'm going to use their suggestion here. So Colab has already given us a suggestion to create these cumulative returns. I'm just going to use what they have here. So I'm just going to tab over. So here it has SP 500 cumulative return. We're creating a new column called cumulative return, and we're setting it equal to our daily return, which we calculated earlier, the column that we created called daily return in SP 500 and in VNQ. So it's going to be 1 plus SP 500 daily return dot cum prod. All right, so that works. Let's go ahead and run this, and let's create a new cell. All right, now in this cell, we're going to plot the returns. All right, and Google Colab has given us a suggestion as well. So you know what? It looks pretty good. I'm going to click the tab button and let's run it and let's see. All right, and just like that, we have plotted these returns. All right, so what I'm going to do, I'm going to go back up here. I'm going to create a new cell, and now in this cell I want to print the cumulative returns. All right, so Google Colab has given us a suggestion, so I'm going to just tab it over, but I don't want to print every single value in the column cumulative returns. I only want the last value. So I'm going to put a square bracket here and put -1, and come down here, put a square bracket and put -1 again, and let's run this. Okay, so now we can see that -1 is not in the range, and that's okay because I just need to put here dot ilock, and same for here dot ilock. All right, the location. So let's go ahead and run that again, and now we get the cumulative returns. So let's go back down to our plot, and like I said, it looks good, right? In blue we have the S&P 500 returns or cumulative returns, and in the orangish yellow we have VNQ's returns. So it looks really good, but I want some labels. I want to know what it is that we're plotting here. I want to know what these values are that I just now shown or showed to you all. And what these values are, this is basically saying that if we had invested, let's say, $1 10 years ago in the S&P 500, then we would have $2.748 today. And if we had invested $1 in VNQ or real estate, then we would have I'm just going to round this up to 12. So we would have $1.12 today. So we would have had an extra 12 cents, right, per investment per share of VNQ. And so we can easily see that the S&P 500's cumulative returns have been greater in the past years or the past 10 years than VNQ or the real estate market. All right, but I'm going to make our chart look a little bit better, our plot look a little bit better. So here I'm just going to type plt.x label, and I want the x label to say the returns of, oh no, I want the x-axis to be the days, right? And then I want the y-axis, so I'm going to type plt.y label. I want that to say the returns of a $1 investment. All right, and I want to give this chart I want to do a title. So let's see, plt dot title, and I'm going to put stock versus real estate. All right, so let's go ahead and run this now. And now I think this is a lot more informative of what's going on. And that looks good. All right, so in about 10 years, the real estate market seems to be losing compared to the stock market. All right, now this is just a small experiment, but I will leave some links from other articles also stating the same thing. Again, this is just an experiment. We can see that the stock market gives a better return than the real estate market, and that's pretty much it. So thank you all for watching the video, and a special thanks to the Patreon supporters on patreon.com. Again, if you would like to become a supporter of this channel or get the code or data sets, I will leave a link to the Patreon page, which is patreon.com/computerscience, in the description below. Thanks for watching, and I hope you all have a great day, and I'll see you all in the next video.